Hello and welcome to the weekly market update from ICM.com. We're going to start by the coronavirus updates and then highlight the key economic events for the week, the economic events and releases for the coming week, and then go over major charts on the MetaTrader 4 platform. So first, let's start with the COVID-19 developments. We've been seeing a surge in numbers, especially in the United States. The confirmed cases around the world are close to 11.5 million, almost 1.5 million increase in a week, which is large relative to previous week increases. The recovered cases are at 6.1 million, around 53%, while deaths crossed above 530,000. Yesterday, at least 32 states in America recorded an increase in coronavirus cases. The US is having around 50,000 new cases every day, which is high relatively to what we've been witnessing for the past couple of weeks. So we're back to the highest numbers on record in the United States. India passed Russia and became the third worst hit nation globally, with confirmed cases crossing above 700,000. And even Australia over the weekend saw a jump in cases, mainly in Melbourne, around 100 cases. So this could have some impact maybe if they're going to adopt some lockdowns. So we're going to see how the Reserve Bank of Australia will react to such development in the coming weeks. So this is mainly about the COVID-19. Governments are stuck between two options: either closing the economy again to stop the spread but deal with economic consequences and face maybe a sharper market collapse than the one that we witnessed back in February and March, or keep the economy running and deal with the COVID-19 cases, similarly to what's happening in the United States. So this is what you need to know about the COVID-19. Moving forward to the top economic events for this week, it's a bit shy in terms of economic releases. So today we had the German factory orders for May. They were out showing an expansion, but less than expected. The construction PMI in the United Kingdom surged to 55.3, the highest reading since July 2018. And a while ago, the ISM non-manufacturing PMI was out from the United States, showing a rise to 57.1, which is a very, very good and solid number, which could signal that the economic recovery is strong and rapid in the United States. So tomorrow we start early with the Reserve Bank of Australia interest rate decision. The bank is widely expected to keep policy settings unchanged. Interest rates at 0.25%. And also they are likely to keep on protecting the yield curve control for the 3-year yields. However, the board, as we said, will have to monitor the recent outbreak and cases closely. So if the outbreak gets more significant and the government will decide on another lockdown, so the Reserve Bank of Australia will have to maybe react to such measures. We move to Europe with the German industrial production in May. Expectations of a rise by 10%. Versus the previous sharp decline in April of 17.9%, and the US job openings in May also a consensus of 4.85 million versus 5.046 prior. And we end the day with the American Petroleum Institute crude oil stock, which was significantly lower last week and also hinted to a lower drop in also in the official figures by US Energy Information Administration. Moving to Wednesday, the European Union will publish the economic forecasts. The quarterly forecasts will help us to identify the current and future economic performance in the region. Then ahead of the US session, we have the Canadian housing starts will be out. Expectations of a slight increase to 198,000 from 193.5 previously, and the weekly oil report by US Energy Information Administration. On Thursday, we start early with the consumer price index from China. A negative change of 0.5% is expected. A surge in German trade balance surplus in May to reach 5.2 billion versus 3.2 billion in April as the economic activity started to recover. Borders are open again, so the exports are flowing more smoothly. This is from Germany. And then the Eurogroup meeting, also any headlines concerning the recovery fund could have an impact on the market, especially on European indices. And the weekly US jobless claims expectations of a rise by 1.375 million versus 1.427 million previously. On Friday, the US producer price index also will be out, 0.4% change expected. The Canadian jobs figures for June as well. Expectations of a job gain of 700,000 and unemployment rate to have dropped to 12% from 13.7, also showing an improvement in the labor market in Canada. And finally, the US Baker Hughes oil rig count, which dropped to 185 last week, the lowest reading since 2009, still signaling that producers aren't willing to resume or restore their production as long as oil prices are near the current levels. So these are the top economic releases and events to monitor for the week. We're going to go to the MetaTrader 4 platform to discuss some of the major charts. So I start first with the euro dollar. Mainly the dollar was having a bad start, but currently we've seen a pullback or a rebound due to a better than expected services PMI reading. So here we can see also the drop on the 1 minute chart on the euro dollar. We start seeing the drop ahead of the release, and then this sharp drop here was on the release of the ISM non-manufacturing PMI, which came out at 57.1 versus an expectation of 50. So for the euro dollar, let's start with the weekly chart. We've seen here a second positive close last week, and currently the market opened on a stronger note, and we've seen a rally in the euro dollar supported by improved risk appetite. So the euro dollar is on the rise. We go for the daily chart. We can see that we broke above the recent highs that were controlling the market. So we're now near almost a 10-day high. We traded near 1345, which was also a key resistance. We're going to see it on the hourly chart here. So we were trading inside this channel that we talked about last time, and we succeeded currently to break above this channel, and here we had a little bit of retracement to it, and then we went higher. So what we have to monitor is the resistance level that held ahead of the ISM manufacturing release. So watch out if you're long on the euro. Watch out for this key level 1345 ahead of another key resistance level of 1420. So these are the key levels if you are long on the euro that you have to watch out for. Also, any drop below 13 could also signal further downside. Maybe we could retest the week's open. Maybe we could retest also low of 1167, which is a key support if we were having a negative or a bearish scenario on the euro dollar. So this is for the euro dollar. I'm going to add some of the key indicators. We can see here that the Bollinger Bands were too wide ahead of this small correction. The RSI is overbought above 70. Now we're crossing a little bit below 70, and the price is above the 100 and 200 hour exponential moving average, and we're still trading also above the previous highs. So mainly the bigger picture is a little bit of bullishness on the euro dollar. So this is everything about the euro dollar that you need to know. Moving to the pound. Let's start with the weekly chart here. We can see after this almost a bearish week, we've seen last week a very strong pullback, and we're currently trading near above last week's close. It's a bit of a bullish sign. On the daily chart, we can see here that we're still trading inside the consolidation range for the past 3 days. A closer look on the hourly chart will make it much clearer. So watch out for any break above this resistance level here. So it's combining the previous two tops. Today we almost tested this level. Some analysts might say, or some traders might believe, that this is an inverted head and shoulder with the left shoulder head and right shoulder, but the right shoulder is almost minimal to relatively to the left shoulder. So just deal with it as if this is a resistance level. So watch out for any break above this resistance level, which could trigger a leg higher towards 126.90 throughout the week. So almost we're talking about 180 pips move. And on the downside, watch out for any break below 124.30, which could also trigger further selling towards 123.30, and again towards 122.50. One of the key movers could be for pound traders is any headlines for the developments of the negotiations between the European Union and the United Kingdom for the future ties of the relation between the Eurozone and the United Kingdom. So watch out for any headlines concerning the Brexit talks. This is all for the pound. If we go for some indicators here, we can see that we were literally ranging for the past couple of days. So since the start of this month, since the beginning of July, for the past couple of days, we've been ranging inside this tight range, almost 125.30 from the upper hand, and 124.30, so almost 100 pips range. So any break above this could be a little bit of a bullish sign, and a drop below 124, which could also be the break below the 100 and 200 RX moving average, could be taken as a negative signal for the pound. Also here we can see that there was a divergence on the RSI. We can see a lower RSI with a higher price, so watch out for any move lower. This is for the pound dollar. Moving to the dollar yen, nothing much on the dollar yen lately, and especially that as we said last week, we've been trading inside almost these key and inside this key area for most of the time. So you can see here almost all the time between March and today, most of the time we've been trading inside this range area 105.95 and 108.7. We were able to trade above it for 2 times, but not for too long, and prices dipped again since both the dollar and the Japanese yen are having enough flow from bad risk sentiment, and as risk sentiment is improving, investors are favoring a much more riskier currencies such as the euro, pound, and commodity currencies. So these are the key levels if you are trading the dollar against the Japanese yen. So you have to watch out for, on the interim support, you have 107.30. On the upper hand, the resistance, as we said, 108.10, 108.12. Another support zone could be 106.65, and again 105.94. So these are the key levels to watch out if you are trading the dollar yen. Mainly this is it for the dollar yen. Nothing much happening. If you can see also the ATR on the dollar yen is dropping. If we apply some of the technical indicators, we can see that the 200-hour exponential moving average is providing heavy support for the dollar yen. Here we witnessed support, and then another time a pullback from the 200-hour exponential moving average, third time, fourth time. And currently today also we had a little bit of a bounce from the 200-hour exponential moving average. So watch out for any break below the 200-hour exponential moving average. It could be a significant break. So this is for the dollar yen. Moving to the Australian dollar, mainly all commodity currencies are having similar performance. They are a little bit firmer. So if we go for the weekly chart, 2 positive weeks, 2 consecutive weeks of gains, and currently we are a little bit up on the week. We can see also consecutive daily positive gains. The Australian dollar rose to the highest levels since almost June 11 earlier today, breaking above the resistance near 69.70. So watch out how will this continue, with the key resistance staying at the highest levels in the past couple of months, 0.760, and on the downside you have to watch out for 67.70. So we're still stuck inside this trading range for the past couple of weeks, almost 5 weeks, 6 weeks trading inside the same range. So watch out for any maybe headlines from the Reserve Bank of Australia, though there aren't much. There's the market is not expecting any major changes in the settings of monetary policy, but still any highlights on the future path of the monetary policy could have an impact on the Australian dollar. So watch out for any movement near these levels. Moving to the Canadian dollar, we're still trading inside the channel that we talked about previously. So we're still inside this channel here. We're able to consolidate a little bit here, where we found some resistance here near this level, and currently we're trading lower on the day. So watch out for any break below 34.80, which could trigger further downsell, further selling towards 133.05. And on the upper hand or bullish scenario for the pair for the USD CAD, watch out for any rally towards 37.15. So these are the key levels if you are trading the USD CAD. 34.80 is almost a minor support or a pivot point. So any trade above it could be positive. Watch out for a rally towards 37.15, and on the negative scenario, any drop towards 33.05 level. This is for the Canadian dollar USD against the CAD. Moving to the New Zealand dollar, we're still trading also inside this consolidation zone, similar to the performance of the Australian dollar. we have these key levels: resistance near 65.80 and support near the previous zones that we talked about previously at 63.80. So these are the key clear levels for the New Zealand dollar. As long as we are in between these levels, we're going to continue to trade sideways, awaiting some fresh fundamental drivers or catalysts that could spark any move in the pair, which could lead maybe to another move higher towards 67.70 on the upside, and any break below 63.70 could trigger a move towards 62.30 support. So these are the key levels if you are trading the New Zealand dollar against the United States dollar. Moving to gold, which was positive lately, benefiting from rising cases of coronavirus, which is supporting the flow towards safe haven metal, or safer assets. We've seen gold trading almost at 1786. It was poised for its highest close since 2012. However, following the ISM non-manufacturing PMI, we've seen a reversal or a little bit of a drop in gold prices, dropping from 1786 almost to 1780. As the current the solid reading of the ISM non-manufacturing could mean that the Federal Reserve could taper the asset purchases if the economic indicators will continue to show an improvement in the economic activity. So that's why we've seen a little bit of a correction in gold. On the daily chart, we're still trading near, still hovering near an 8-year peak. Here we have this channel also still solid. So watch out how the price will react if we were able to retest the upper band again. This is mainly on the bigger picture for gold. If we go for a closer look on the hourly chart, we can see also that we are almost here in a flag. So we're trading also here near, we're having a series of higher highs and higher lows, which is also considered bullish to gold. If we apply some of the technical indicators, we've seen that the RSI dropped after touching the 70 level. It was accompanied by positive or solid ISM non-manufacturing PMI, but still we are still trading above the 100 and 200-hour extension moving average, which is considered positive. We can see here how the price was reacting positively when touching the 200-hour extension moving average. So similarly to the Japanese yen against the dollar, watch out for any break below the 200-hour exponential moving average, which could trigger a bigger correction. I'm going to remove all these indicators and just set the 200-hour exponential moving average. So here you can see how the price is reacting with the current level. Watch out for any reversal or any break below either the 200-hour exponential moving average or the trend line combining these two tops, because it could trigger a bigger correction for gold. So this is almost here, yeah, around 23.6. So maybe if we break below 23.6, it could trigger a bigger correction towards 1743, which was a key level. It acted as a resistance here a couple of times and as a support also here twice. So watch out for these levels if you are trading gold. Moving to silver, we are on the daily chart. It is clear that we are trading near the trend line, the falling trend line, combining the previous stops. So currently we are trading here. So any break above this trend line could lead towards a move higher towards the previous resistance level of 1886, and then towards 1961, or almost to $20 per ounce. So watch out for any break above this falling trend line that's combining the previous stops in silver. And also here on the negative scenario, or on the downside, we could witness some corrections, but the worst could come in, or further selling could be triggered if we break below the 1680, which was the lowest level traded since almost mid-March, and till the current day. So watch out for any break below 1680. This could mean that we're still a little bit bullish on silver as long as you are trading above the 100 and 200 hour extended moving average. We're still trading near the upper bound of the Bollinger with the 20 period, and the RSI is still also above 60, which could also give some more room to move. This is for silver. Moving to oil, mainly oil recently. Investors are also mixed between two facts. Maybe they are all related to the coronavirus developments. So, if governments will go for another lockdown to stop the recent outbreak in coronavirus cases, this could lead also to lower demand in oil and and this could be negative for prices. However, if the current if the government will avoid the lockdown and will try to avoid lockdown, and the economic indicators will continue to show improvement in the economic activity around the globe, which could mean also that oil will be in demand and the demand will be recovering smoothly. This could lead to further appreciation in oil prices. On the technicals, we are trading inside also almost here in a range. So mainly watch out for any break below this trend line. It was a clear support for the prices late in June. We tested it twice and the prices were able to rebound. So on the negative scenario, watch out for any break below this trend line, which currently is around 39 level, because it could trigger further sell-off towards 37 and again 34.50. So these are the key levels if you are trading oil. The trend line that's combining the recent lows, a break below the trend line could trigger a downside, a drop towards 37 and again towards 34.60. And on the upper side, any moves to the upside are still capped by the previous resistance near 40 level. So any move could lead towards a rally to the trend line combining the previous tops, which comes in near to 42.40 per barrel. So these are the key levels if you are trading oil. On the top side, 42.50, and on the downside, watch out for the trend line that could trigger further selling towards 37 and 34.60. This is for oil. Moving to Dow Jones, we witnessed a strong start for the Dow Jones today. So here we can see that recently also we're still stuck inside the consolidation zone since June. Investors are afraid of the rising coronavirus cases, but also they are optimistic over the reopening of the economy and the rapid and strong recovery that is showed by positive and strong economic indicators. So this is keeping the mainly the Dow Jones trading inside this range. On the technicals, we need to clear above 26,300, which was almost capping any recent rallies, in order to have a little bit of bullishness maybe towards a move higher towards 26,650 and maybe the previous top of 27,300. So these are the key levels you have to watch out for on a positive scenario, and on the negative scenario, watch out for any break below 25,400, which was the low on Friday, which could trigger further selling towards 24,690. So maybe these are the key levels to watch out for in terms of for the Dow Jones. But what's a good mover? What's the key mover for the Dow Jones is whether the rising coronavirus cases will force the government for another lockdown, which could have severe implications on the market and maybe could trigger the Federal Reserve to do more stimulus or intervene in order to calm down the markets. So this is it for now. If you have any questions, please write them down so I can answer them. In terms of what you mentioned today in information, news, opinions. So I'd like to remind you that all the information, analysis, and news mentioned in this webinar are only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. And ICM doesn't provide any trading signal. So if you have any questions, please write them down. Okay, so somebody's asking about the dollar index. So maybe the dollar index, it is almost similar inversely proportional to the dollar, the euro dollar, since the dollar index is almost 55 or 56% almost from the basket of the dollar index is euro. So almost we have the opposite analysis, but we're gonna go for it. I'm gonna check. So mainly what's key for the dollar index is the current risk appetite. So when the market is when the risk appetite is improving in the market, investors are dumping safe currencies such as the dollar, Japanese yen, and the Swiss franc. And when the risk appetite is getting hit from maybe higher coronavirus cases or any hints of a lockdown or anything that's affecting the risk appetite, investors are rushing towards safer currencies such as the dollar, Swiss franc, and Japanese yen. That's the main move that we've witnessing lately with the dollar index. So even though we witnessed a strong jobs report on Thursday, and even today the ISM non-manufacturing PMI, a very solid reading, but still the dollar index failed to rally since investors are rushing towards riskier assets on improved on an improved economic data, since this could mean this could mean that that we really have a good economic recovery, and riskier assets can rally more than safe currencies. That's what we're witnessing with the dollar. So in order to have some positivity, we need at least to clear today's losses. So we need to bounce back above 97.20 in order to see some positivity, which could trigger further upside towards 97.76. But this should maybe we should have some catalysts in the market, maybe something that could weigh on the risk sentiment to support the index and moving higher towards 97.30 as a first stage, and then towards 97.70. So this is all about the dollar index. So if you have any questions, please write them down. So mainly this is it for today. If you have any questions, please write an email to webinar@icm.com or support@icm.com, and we'll be replying as soon as possible. On Wednesday, we are holding an educational webinar talking about Elliott Wave principle and Bill Williams indicators. So also you can join us on Wednesday. So this is all for now. Thank you for joining. Stay tuned for the coming week with the economic releases and events. Mainly, one of the key events this week, as I mentioned earlier during the webinar, is the Reserve Bank of Australia monetary policy meeting in a couple of hours during the Asian session. So this is all for now. Thank you for joining.